Hi guys, this is Ice. Welcome to my first weekly Forex market briefing for the 2017. As a disclaimer, I have to tell you as usually, all these ideas from this video represent my own ideas of trading, and since this is a free service, I really recommend you to test it properly on a demo account for a few months in a row just to see if this is working for you. However, in case you will decide later on to use any of these ideas on your real money account, you should understand that all the risk involved, it will be yours. As usually, we will analyze 12 financial instruments for the weekly, daily and the 4-hour chart. Feel free to subscribe in any of my online communities. In this way you will be notified each time I have an activity, and of course you'll have the comment option in case you have some questions regarding my posts. Just make sure you will ask me those questions into my public posts. All my trading related activity, it's actually public, so you can ask me your questions there. If you will use the private messages or my email, as many people like to do, let's just say I might need more than 24 hours a day to answer to each one of you, one versus one. This is so time consuming for me, and imagine that I have around 400,000 people following my online activities in many of my online communities. Imagine that 1% of these people will send me private messages or emails regarding my posted charts. Let's just say I might need more than 24 hours a day just to answer to each one of you. That's why please ask me these questions into my public posts. We will start as usually with the EURUSD on the weekly chart. The price action is below the moving averages, therefore we are in a bearish term trend. The 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup, and right now any pullback to long will be just a way to retest the moving averages. Initially the 50 EMA, and of course if this one will be broken much later on, the price action might reach the 200 EMA. Let's lower the time frame and follow the same direction. On the daily, the price action right now it's below the 200 EMA but above the 50 EMA, therefore stop trading long, stop trading short. Why? Because the price action can either range and design much smaller than this rectangle, or in case the price action might, let's say, decide to change the trend from bearish to bullish, you will be caught in a wrong direction, in the wrong fight between the buyers and the sellers. The highest probability setup remain for short even on the daily, but for this we need to see the price action dropping below the 50 EMA. In that moment the daily chart will follow the weekly direction, which remain bearish. And of course, in case we will have the change of the trend, probably this will be first seen on the 4-hour chart. In that moment we will have the same direction on the daily, and we can take let's say safely take the long setup in consideration. Until then we will just stop trading long, stop trading short, because the price action is between the moving averages, and we will look for a drop below the 50 EMA just to consider our usual bearish setup for the EURUSD. On the 4-hour chart, this is our December chart. We were expecting the price action to retest the 50 EMA and of course to design a pullback, and in case I pointed you back then that in case the price action, let's say, will fail to design a new low, instead of that will design a higher low than the previous one, or let's say maximum of a double bottom, we might have a pullback, a powerful pullback, a corrective swing to retest the 200 EMA, which it did. And of course this was a forecast pattern. You should have adjust it like this and consider this a pullback to retest the 200 EMA. We have the same direction as we had on the weekly chart, even on the daily, and of course this pattern reach the ideal target, which in my opinion it's 50%. It's the same setup as for the Fibonacci retracement, 50% Fibonacci. Of course, ideal would be the 61.8, the golden ratio Fibonacci. Anyway, the price action drop again below the moving averages in the direction of the higher time frame trend, weekly and of course the daily, and again the price action failed to close below the previous significant low. Therefore, this was a pressure from the buyers, eventually went again above the moving averages, but here it's the, let me shift a bit this one, here it's that initial attempt to break the 200 EMA when we were retesting it. Anyway, initially, based on this bullish swing, the price action failed to break this one. This became the bullish fractal that was designed during the initial 200 EMA breakout, and I pointed you that based on my ideas of trading, of course, if this bullish fractal will be broken in that moment, we will have to consider this an opposite signal, and of course, since this isn't in the higher time frame direction, we will stop trading long, stop trading short. And this is that point where after this failure to design a new low, the price action broken this bullish fractal, probably let's say around here when we had the first candle closing above it, and after that we had a pullback to retest the previously crossed in an opposite direction. The 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup, and after this crossing the price action retested to the peep the 200 EMA. And of course after that we had a new high, and this new high reached our same setup. These are Fibonacci clusters, also known as Fibonacci clusters. I like to call them Fibonacci confluence areas. It's a zone. I'm not using simple lines as support or resistances. I'm using zones because these are based on the Fibonacci levels, and of course I'm using the Fibonacci retracement tool on the trend direction and on the opposite direction, just to find our usual levels, 127.4, 132.8. This is the first standalone support or resistance above the 100% retracement, and of course later on 161.8 and 261.8. Very rarely I use the 423.6, but that just if I see it in a confluence with other significant Fibonacci tools based on let's say higher counter trend swings. Anyway, the price action reached this level, and after that we had a new attempt. This time was pressure from the sellers to break the 200 EMA, fail. That's why we have here this bearish candle with the shadow on the bottom side of it. And after that, a new attempt, and of course a breakout of this zone. But this whole zone and these swings, this new height, failed to break this bullish fractal. It was an early bullish fractal that was created, exactly like we had here after the 200 EMA retest, and of course clear breakout. The same setup here. This one didn't have a candle close above it, but this one had, and actually this swing here, it's the last bullish fractal. If the price action, let's say, will break this area where we had the previous significant lower high, we were in a bearish term trend, and in case we will have the change of the trend from bearish to bullish, we should see this level falling. But in my ideas of trading, I need to see at least the next significant resistance broken as well in order to consider a bullish setup. Otherwise, this might be a ranging period of time, a rectangle. an exhaustion from the price action movement, and after that we should see a drop below the moving averages, a new crossing. The 50 EMA will cross the 200 EMA in the direction of the main term trend, which in my opinion remain bullish, but due to this opposite signal on the 4-hour chart, I will stop trading long and of course stop trading short unless we will have that new drop below the moving averages. Sorry, I will adjust all these charts on before publishing it, and I will just point you online the final charts with all these tools adjusted, the zones. It will be so much time consuming to do it right now. Let's skip to the next financial instrument. This is the GBPUSD on the weekly chart. The price action, it's below the moving averages. We had a crossing, the 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. Here it's the bearish main trend line, and as you probably know, based on my ideas of trading, there are 3 trend lines. This is the main one. We should have, let's say, but I'm not using it because I'm a multi-time frame trader, I'm a swing trader. We should have the inner, outer and trend line on the same chart. Probably I will use it on the 4-hour chart, but not on the weekly or the daily. Anyway, this is the main trend line. We should have the outer and much later on the inner. This is the smaller swing. And of course, the price action from time to time would like to retest the main trend line to the pip. I'm using heights and lows, shadows, not the body of the candles as many traders do. And let me point you here, this is the situation. Based on the previous movement, it was the first one here, but it doesn't matter. I will take this previous example. Here, our main trend line was like this, and here was a false breakout. Since the price action designed a new low in the direction of the main trend, which remained bearish, I should adjust this main trend line here. Therefore, for the future movements of the price action movement, we should see a retest to the pip. In that moment, we might have here something like a W letter. It's a bearish harmonic pattern with the D selling point as a signal. I'm not using this for my entry setup, but just to point you the reasons why I'm using these trend lines adjusted to the pip. Of course, it doesn't have to be to the pip. We are on the weekly chart. If you will zoom in the maximum way, probably you will notice here 1 or 2 pips distance, but just to point you that I'm using the real height and the real low, not just the body of the candles to draw my trend lines. Anyway, on the weekly chart, we are below the moving averages, therefore any pullback to long will be just a way to correct, to retest, sorry, the 50 EMA. And of course, if this one will be broken, most likely we will see the 200 EMA later on retested to the pip, probably based on this main trend line, the bearish one, false breakout of this main trend line. And of course, much later on, we should see again a new drop below the moving averages. Until then, in case we won't have this powerful corrective swing, the highest probability setup remain for a new low. And of course, here we had a false breakout. The full body of the candle, this bearish candle, was closed below the previous significant low. Therefore, this can be considered a breakout. It was invalidated because the price action designed this pullback above the support line, and this is the reason why I'm not using simple lines. I'm using zones, and based on my zones and these levels, we won't consider it a breakout unless we will see the bearish fractal here. Anyway, we will consider this as a zone and not a breakout, a clear breakout. This pullback is just a corrective swing. If the price action will break this bullish fractal here, in that moment we can consider all this area here, this new low, an invalidation for the price action movement to design a new low, and the price action should continue to retest the 50 MA. If this one will be broken, of course, the main trend line, and of course much later on the 200 MA. This is the reason why I'm having here as the highest probability setup a potential bullish harmonic pattern, this bullish harmonic pattern extension at the 261.8 added on the counter trend move I pointed you earlier, and of course here it's the last one, the last counter trend move that we saw. Here if we will have a healthy corrective swing, let's say around the 50 MA or maybe higher, let me check. As you probably know, I don't prepare my charts nor my recordings. I just watch the charts and record. At least you will see it on the first side. Anyway, 50% it's here, ideally it's 61.8. If the price action will have right now a corrective swing that will be below the 50 MA, we will not consider this counter trend for our future projections, our usual levels 127.4, 132.8, sorry. Anyway, let's lower the time frame to the daily and focus on the same bearish setup. On the daily GBPUSD, on the daily chart, the price action is between the moving averages, aiming for the 200 MA retest. We had an early crossing very long time ago, and I've pointed you that we can consider any of these retests, especially with closing candles above or below the 200 MA, as a new crossing between moving averages. Why? Because here the price action, let's just say, due to the pressure from the buyers, was struggling to change the trend from bearish to bullish, fail, a new drop below the 50 MA in the direction of the main trend, which back then was bearish, sorry, and a new low. This means that we can consider this as a crossing. And of course, other retests and even false breakouts of the 50 MA were just signaling first warnings, first clues that the price action might like to retest the 200 MA again. And this is the reason why we are still having here in place this dark gray bearish harmonic pattern, pointing you that the price action might like to retest the 200 MA again. Of course, we will need to readjust this right now, since the price action here was trying to retest the previous, actually broken the previous significant low, and we will probably see it here on the 4-hour chart. Was that the new Prime Minister Theresa May of the United Kingdom speech, of course in the direction of the Brexit. We will talk about it later on the 4-hour chart, and due to this a new change of the trend. Anyway, right now price action it's holding between the 200 MA and the 50 MA. And due to these ideas, we will stop trading long, stop trading short. Weekly it's bearish, therefore any drop below the 50 MA on the 4-hour charts and much later on the daily will means the price action turning into the direction of the higher time frame, which remain the highest probability setup, and we will take a short position. Let's consider, no, I want to say this. Anyway, in case the price action will continue the direction of the higher time frame weekly and will design a new low, most likely we will see this 261.8 reached. Why? Our usual level 127.4, 132.8 doesn't provide us any clue due to this last breakout. If we will have to consider, we might have to consider a zone like this and probably a new minor one, something like this, but I don't expect, in case we will have a new drop below the previous significant low, the price action to stop this level. For this this setup and this chart example, I will use a wider area, probably something like this, and I will consider all this area a zone. It's the counter trend, this white one 261.8 in a confluence with this one 127.4, 132.8, and of course if this area will be broken, most likely the price action will reach the 261.8. As an example, right now the price action here reach minimum 50%. Ideal of course would be the 61.8, the golden ratio Fibonacci, but in case the price action will follow this direction, most likely we will reach this 261.8. Anyway, we will focus on the bearish side if we will see the same setup on the 4-hour chart. This is our 1-month-old chart. Anyway, we were expecting a pullback to retest the 200 EMA. We had this crossing in December, and I pointed you here a pattern as a forecast, as a signal that the price action might like to retest. Sorry, let me see, let me check. We have zones. Nope. Let me point you like this. This is how you should have readjust this chart if you are following my forecast. Anyway, let me shift this to the right. The price action reached the 200 EMA, retested it, and after that we had a new drop below the moving averages, below the 200 EMA, below the 50 EMA. Below this area, the previously broken support that acted as a resistance, even though here we had a false breakout on the second attempt from the buyers. Here in this period of time we were expecting the Prime Minister of United Kingdom speech, and of course it was a speech in the direction of the Brexit. As you probably know, the previous Prime Minister resigned, saying that, and of course I truly believe this is true, if you don't think a second a direction of a directive or a vote, in this case the Brexit vote, it's following your ideas or your philosophy, political view, point of view, and so on, you should resign and let other people that believe into the new ideas or the other ideas to lead the country. And big round of applause for that. Anyway, Theresa May of course said she's for this Brexit and continue the procedure. I'm not sure they will actually leave the European Union, and I usually don't spend time to analyze this fundamental analysis, but this is the latest big event, and in my opinion it's much bigger than the Swiss franc crash that ruined the financial markets on the 15th of January 2015. In that moment, as you probably know, the Swiss banks stopped protecting their position, their 1.20 position for the euro Swiss franc, and of course due to that all the financial markets collapsed. After that, I'm saying the Brexit, it's much bigger than that, but of course I think that this is based on the trader sentiment, and especially position and swing traders are actually waiting for the last procedure of the United Kingdom leaving the European Union. Many of the people voted for this Brexit just because they think the GBP, the Great Britain pound, it's actually as good as Swiss franc or something like that, and might become a refugee investment tool, blah blah blah, you know the ideas. Anyway, it's their point of view, it's their country, I don't care, but as a trader I must see it as a real situation. Let's just say tomorrow the GBP will leave the European Union. In that moment they will need a weaker GBP. They will need a weaker GBP just to have a much more value for their export companies and export contracts, and because of that that will be in the opposite direction than what the people might want or thought they will have a powerful GBP, a refuge investment tool for the markets. In that moment, it will be really difficult for the government and for Bank of England, sorry. Why? Because in order to protect their export companies, they will need a weaker currency. Weaker currency comparing it with the countries or the zones where their export companies have activities and of course these export contracts. Let's just say, and until now the kind of 80% of the export companies are exporting, are sending goods produced in the United Kingdom on the Eurozone. If they will have if the United Kingdom will leave the European Union, in that moment they will have to have a weaker GBP than the euro if they intend to sell in the Eurozone. Other potential customers for their exported goods will be Canada, will be United States, maybe Russia, and of course Asia. So against all these currencies, they will need a weaker currency. That means, let's say for the European Union or for the United States, they will need for their $1 million contract to receive more British pounds. So that means the GBP must be weaker than the United States dollar than the moment when they sign the contract. Imagine you are a GBP producing company and let's say you produce furniture. I like to give this example in order not to change the examples of the fundamentals. And you are producing furniture for the United States. When you sign the contract, you sell it with $1 million. The United States would like to pay in their own currency, so they say $1 million. You say yes, the rate between GBP and USD, it's good. You've done all the math and you say that's a good contract for us. Yes, we will sell you our furniture produced in the United Kingdom with $1 million. But 3 months later, when the payment will be done, let's just say the GBP it's much higher than the United States dollars. In that moment means you've made your math and you said probably like 800,000 pounds are good for you, and right now you are receiving less. Let's say you will receive 600,000 pounds on that $1 million contract. What you can do in that moment, all your production costs are in GBP, and in that moment you are receiving less GBP for your contract. In that moment your contract, your sold furniture, your exported goods 3 months earlier was a bad contract for you. So in order to protect their export companies, the Bank of England will have to have a lower value GBP. And of course, if you will ask a person living in the United Kingdom, your, let's say, 1 million pounds house will now have at the market a value of just 600,000 pounds. Do you like it? Probably they will say, hell no. And this is the reason why it will be really difficult for the new government to keep this balance between protecting their export companies, protecting their people and their people assets, and in that moment they might just realize it was a wrong decision on this vote. And in my opinion, as a trader sitting outside of this zone, I will have to say the GBPUSD might not still be in the major pairs. As you probably know, us, the traders, considering the major pairs, our highest possibility for trading, that's Euro USD, GBPUSD, USD Swiss franc, and of course USD Japanese yen. These are the 80% of the trades on the markets are using these financial instruments. In the moment when they will really exit the European Union, they will have these problems, and probably we won't spend time on the GBPUSD as traders. If we will do it, probably we will just come here to shorten the GBP. If we will find opportunities, let's say, in the direction of this. Why shorting? Because as you probably know, short positions are usually faster and much more bigger than the bullish, and of course in that moment we will focus on this direction. Anyway, let's skip to our technical analysis from this fundamental. Hope you understood this example, and if you want, ask me later your questions related to this on my public posts. Anyway, after this pullback, of course, we had a new low. Traders were actually feeling that this speech of Theresa May will take this direction. That means consolidation on the markets, and of course this is the reason why we had this gap. After this, many people said yes, the GBP, and you know, since we are on the GBPUSD, if you are exchanging rate, it will be 1 GBP equal how many US dollars, and due to these ideas they said, okay, in this direction of the speech, okay, let's initially was let's sell the GBP, and after that they said, okay, let's buy it, the GBP will be okay to holding it as an asset, probably position traders and so on, and this is the reason why we are here today. Another common idea is that the GBPUSD was moving in the same direction as the EURUSD. That was valid for many years, yes, because the GBP was part of the Eurozone. So EURUSD, GBPUSD, kind of the same direction. But right now, since the Bank of England will have a different point of view, especially regarding the loans, the gold assets, on their reserves, the currencies we should see different than the EURUSD movement on the GBPUSD. Anyway, we had a crossing, which means an opposite signal than the weekly and the daily. Therefore, stop trading long, stop trading short, unless the price action will drop below the moving averages again. In that moment, we will have the weekly and of course the daily direction on the 4-hour chart as well, and that's the highest probability setup. Until then, the price action stopped at our usual levels, 127.4, 132.8, so it was a much bigger overlapping this yellow one bearish harmonic pattern. If the price action will drop below this 200 EMA and this next significant support, in that moment we will be prepared for short again, and we will consider this a ranging period of time like a rectangle between this significant resistance and of course this previous significant low area as our support zone. I will adjust all these tools before publishing my charts later on. Let's skip to the next financial instrument. USD Swiss franc. On the weekly chart, the price action is above the moving averages. We had the crossing, the 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup, and after this initial attempt and of course a new higher high, we had a pullback as a way to retest the 200 EMA before having a new attempt and of course a new high. This big bearish candle, it's the 15th of January 2015. when the Swiss bank stopped protecting their position on the euro Swiss franc, and of course this one affected all the Swiss franc markets, including the USD Swiss franc. Right now, price action reached this level, preparing for a new high. This means buying the USD in order to sell the Swiss franc, and of course in this moment when let's say the traders realized its confusion on the market, they actually sold the USD in order to own the Swiss franc. And this is that situation that I pointed you earlier on the GBPUSD. It's always a fight between the Swiss bank and of course the position traders, and very rarely swing traders like myself, but I also end up using my positions as a position trader eventually, especially on these refugee investment tools like it is the Swiss franc, the Japanese yen, and of course gold and silver. We will talk about it later on. Anyway, due to this idea, the people are owning the Swiss franc, and this one, it's not in the interest of the export companies in the Switzerland. And of course, due to this idea, if the price action will drop below the 50 MA, will still be just a way to retest the 200 MA, and in this moment we can expect, or maximum, let's say at this support, we can expect the Swiss bank to sell their Swiss francs in order to buy the USD again to take this rate. Of course, they are not interested on this particular financial instrument. They are focusing on the euro Swiss franc, but these both pairs are working in the same direction usually. Of course, we will focus on this one only, and that of course, if you want to trade the euro Swiss franc, just tell me about it and we can discuss about it, paste me your charts, and who knows, maybe you will receive a second opinion that it's based on the technical analysis. Let's lower the time frame to daily, and on the daily we had the crossing, the 50 MA was crossing the 200 MA from bottom to top. This is a bullish signal, a bullish setup, and of course here we already had in place this potential bearish, this gray one, harmonic pattern at this key level. This is a key level for us based on previous significant high, and of course Fibonacci levels. After that we had a pullback as a way to retest the 50 MA, again pressure from the buyers, a new attempt around here, and after that a new drop below the 50 MA, and of course below this support. This is a previous broken resistance that acted as a support, this support was broken, acted as a resistance, and of course a drop below the 200 MA, and you can see even on the daily how beautiful these supply and demand zones are working for us as swing traders. And right now looks like the price action, it's retesting the 200 MA, broken as a support, act as a resistance. If this one will be broken, most likely we will see this next significant resistance, which is in a confluence with the 50 MA broken, and the price action will aim this direction. At least this is what the Swiss bank might like in order to protect their export companies. They want to buy the USD in order to sell the Swiss francs, and of course this is against our point of view as traders, which we want to use this Swiss franc as a refugee investment tool. Anyway, due to this breakout, we will consider this bearish fractal that was created during the initial breakout of the 200 MA as our key point. If the price action will drop below this area, In that moment we can consider this 200 EMA breakout and this bearish fractal as a valid one, and due to these ideas we might be prepared for short. That of course because on the weekly we might see a drop below the 50 EMA. So the 50 EMA on the weekly, it's actually the 200 EMA on the daily, and who knows, maybe this will be in the same area as the 4-hour chart. Until then, on the weekly chart, we are preparing for bullish. This is the highest probability setup. If we will see on the daily a new breakout and the run above the 50 MA area, and the same setup on the 4-hour chart, sorry, we will be prepared for the bullish setup. This is the highest probability setup based on the higher time frame, which is weekly. On the 4-hour chart, we were around here. We were expecting a pullback as a way to retest the 50 MA, and after that, if we will, if we had a failure, and we had two failures to design a new high, we were expecting a powerful pullback as a way to retest the 200 EMA, which it did. So right now we should consider this pattern. This was a forecast pattern, something like this. Anyway, the price action had a third attempt around this area and a new failure to design a new high. We could have had, let's say, even a false breakout of this previous significant high, and after that the price action dropped below the moving averages again. We even had a crossing. The 50 MA was crossing the 200 MA from top to bottom. This is a bearish signal, a bearish setup. Eventually the price action retested this that was available for the daily as well, support zone. It was a broken resistance, acted as a support, so it was possible and acted as a support in the future. After the retest of the previously crossed moving averages, the price action designed a new low, and this new low became the bearish fractal, a new attempt and retest of this zone as a resistance, and after that a new low, basically confirming us the bearish term trend on the 4-hour chart. This is against the weekly chart direction and trend, and due to this idea we will stop trading long, stop trading short, unless the price action will break this resistance and of course the 200 EMA and run above it. In that moment we will be prepared for a bullish side, which it is on the 4-hour chart in the same direction as the weekly. And of course later on we will expect the same setup to happen on the daily, which means breaking the 200 EMA, aiming for the 50 EMA retest, and if the price action will break the 50 EMA on the daily as well, it will be 4-hour chart bullish, daily bullish, and much later on, of course, we will consider a pullback from this 50 EMA on the weekly chart, aiming for a potential new high, or at least a retest of this previous significant high area, and in that moment we will have a much wider rectangle between this significant resistance and of course this significant support. As you probably see it, at least on the weekly, we see it clearly that this is the traders area where they want to sell the USD in order to own the Swiss franc, and this is the Swiss bank zone where they actually want to sell, for example, their sell their Swiss franc in order to buy the USD. That of course because they want to protect their export companies. This situation is actually happening on many financial instruments where the traders, the retail traders and speculators, including the investment companies and the hedge funds, are actually taking positions on these markets. And a common practice, and I want to speak about this as well. I've seen many people blaming George Soros on all the social media. Guys, George Soros, yes, he's a speculator, but he's also an investor. He wants to make money. He didn't invent this game. It's not his game. He just became so good at it, and of course by taking his positions sometimes as speculator, it is against other interests of countries or people from those countries and so on, but he's just good at this game. He became good at this game. He's not doing this to hurt people, so don't blame him, please. I feel offended as a trader because I'm actually aiming the same direction. I found this market, the foreign exchange market, and of course I want to be good at. So if I will, let's say, eventually in 10 years from now became so good and will earn so money from this market, in that moment I might not like to be considered an evil speculator just because I'm good at this game that I didn't invented it. So I don't know. I don't think I can stop you to post this type of posts on social networks. This kind of nonsense for me, but just uh, receive this as a second opinion, probably from a guy that it is involved into this business. This is a business. It's a game that we didn't invented it. We want to be good at, and eventually when they are, people might say that we are evil. It's a fight always between national banks and of course the retail traders, the position traders, swing traders, or even big investment companies like George Soros own one. Anyway, we will talk more about it on the gold later on another big refugee investment tool. This is for the USD Swiss franc, and we will stop trading long, stop trading short, unless on the 4-hour chart we will see this resistance broken, retest of the 200 EMA and run above it. Or in case we will see still going short, we need to see this daily bearish fractal broken in order to consider a potential change of the trend from bullish to bearish again. Let's skip to the next financial instrument. That is the USD Japanese yen on the weekly chart. The price action, it's running above the moving averages. We had an early crossing, the 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup, and after the retest of the 200 EMA, the price action stopped around this area. This was a key significant level for this financial instrument. The broken resistance that acted as a support, so it's possible to act and actually acted as a support in the future, and of course this will remain a key level for the future price action movements. We didn't have a crossing, the opposite crossing, because here the price action, at least on the weekly chart, you will see the same tools working slowly, so you'll have a much clearer point of view. Here the price action failure to design a new low to break this bearish fractal, and this is the reason why all this area was considered a false breakout of the 200 EMA as a way to retest it. So after this the price action went again above the moving averages. This is a refugee investment tool, the Japanese yen, and as you probably know, it was the only currency that for many years and continuously didn't had inflation. They actually had deflation. If you were making a deposit on Japan in banks, each month you should have go to the bank and pay them an interest for keeping your money into the bank. Not like all the other currencies where you actually sorry, go to the bank to collect your interest for your deposited money. So due to this idea, this currency actually became another refugee investment tool for us, the traders, among the Swiss franc and of course gold and silver. And this is what people in the UK probably think about their Great British pound. It will be really difficult for them, and hopefully I will be able to explain you much later on the gold and silver why this will be difficult for the United Kingdom and of course the British people assets. Anyway, right now we will focus on the bullish side on this financial instrument. We should expect a corrective swing. As you probably know, after powerful impulses we should see powerful correctives, exactly like we had here. Here was a bullish trend in development, and after this powerful bullish trend that was confirmed by moving averages crossing, we had a powerful corrective swing that eventually even broken as a way to retest the 200 EMA. The same thing can happen here on this bullish minor swing. This is a powerful impulse, and after that, of course, it will be natural on the financial markets to have a powerful corrective swing that will last and at least around the 50 EMA. Ideal, of course, will be the 61.8, the golden ratio Fibonacci. Let's see the daily chart, and on the daily we have the same situation. Right now we already confirmed this potential bullish idea. We were in an opposite scenario here. The 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup, and after several attempts to retest the 50 EMA, eventually the price action broken it, run above it, broken the 200 EMA, and run above both moving averages. Therefore, this corrective swing right now is just a way to retest the 200 EMA. This is a powerful bullish impulse, so it's natural to see a powerful corrective swing probably as a way to retest the 200 EMA. Have in mind though that this is the daily, and due to this idea, since the price action is below the 50 EMA, if we will see the same setup over and over again below the moving averages on the 4-hour chart, we might have a change of the trend, and in that moment we can consider all this area, even though here we had a breakout of the moving averages, a powerful corrective. So bearish, bullish, but as a corrective swing followed by again bearish. Of course that will be in the opposite direction of the weekly, but we can expect later on, let's say, this bearish fractal to be broken, and we might have a potential change of the trend from this previously bullish to this initial bearish. That of course if the price action will fail to design here a new high in order to continue actually the bullish. We might have ranging period of time, we might have a change of the trends, but that of course will be first seen on the 4-hour chart. And on the daily, this was the daily, okay, and on the 4-hour chart, this is our December chart. We were expecting this bullish trend to continue. The 50 EMA was crossing the 200 EMA from bottom to top as a bullish signal, a bullish setup. Here we had a powerful corrective swing at this change of the trend on the 4-hour chart from a ranging period of time. Initially was here bearish range, which means consolidation on the markets. So the price action based on this pattern can break any of these sides, bullish or bearish. Here broken as a bullish, and here we had a failure to design a new low, at least a way to retest this rectangle support zone, and after that broken the resistance. So this might act as a resistance in the future in case we will have a powerful corrective swing. The price action might retest the zone where initially broken this rectangle. Anyway, due to these ideas, we are running above the moving averages for a period of time, and we were expecting here in December a retest of the moving averages of the 200 EMA in particular, and this is that support that we are focusing on. Broken as a resistance, acted as a support. My chart is zoomed, so in order to see the bigger picture, here acted as a support, around the 200 EMA area, again a retest of the 200 EMA, eventually broken. This became the bearish fractal, and this bearish fractal was broken here, even though this initial support breakout was invalidated later on as a way to retest the moving averages. This is actually where people let's say, beginner retail traders are actually making mistakes because they are not giving their positions enough stop loss level. They are trading on the intraday, and even if they are considering the higher time frame, they don't set a proper stop loss level. So their positions are always hitting that tight stop loss level, and due to these ideas, they're actually trading against banks, big investment companies, hedging companies, and this is why on the long run at least they can still be in the market. If you will learn properly the swing trader, the swing trading, and of course you will act as a swing trader, eventually, let's say, if you will keep your positions longer, maybe you will become a position trader. In this way, by trading the higher time frames, you will see properly your tools, the same tools that probably on the intraday fail on you. So this is how I'm seeing things here. Okay, we had a powerful corrective swing here. We had several impulses in this, let's say, bearish minor trend, because this is the 4-hour chart, and after several impulses on this bearish side, we had a powerful corrective swing. And this powerful corrective swing, if we will measure it, it's 50%, just 50%. Ideal, of course, would be the 61.8, the golden ratio Fibonacci. But this is a healthy retracement, a healthy corrective swing. It wasn't a proper powerful corrective swing that, let's say, sometimes will last until the 88.6, where we will have our bearish harmonic patterns, and many Elliott wave patterns are happening around these levels: 70.7, 78.6, 88.6, and sometimes on a ranging market even the 100% level. So if you would have went short here and your short position would have had, let's say, a 50 pips stop loss level, in this scenario you're probably out of the market before the trend is developing. This is the reason why you either wait for the proper signal in the direction of the higher time frame, or you will wait a clear signal of a change of the trend. And this clear signal happened actually here on this swing. Until here was a powerful corrective before we were bullish, even though here the price action broken this bearish fractal that was created during this initial 200 EMA breakout. But here the price action was actually retesting the previously crossed moving averages. Here it's the 50 EMA that was crossing the 200 EMA from top to bottom. This is an early signal of a potential change of the trend. So this powerful pullback that we've measured it, and we saw it went around the 50% Fibonacci level based on this whole impulse, was just a way to retest the 200 EMA before designing new lows and of course lower highs than the previous one. So if the price action will continue this direction, we can see a bearish trend in development. That, of course, if you want to wait for a proper level and you want to follow the trend, if you are a trend follower, you should wait probably this next significant support to be broken as well, in order to take let's say a safe short position. On the 4-hour chart we are bearish. On the daily, stop trading long, stop trading short, because the price action is between the moving averages. It's slightly bullish because we are above the 200 EMA, but it's not a clear bullish and nor a clear bearish. On the weekly we are bullish. Therefore, if the price action will continue what we saw on the 4-hour chart, that means continue and design a new low, on the daily we might have the same setup. If the price action will break this 200 EMA, that probably on the day, on the 4-hour chart, it's this next significant resistance, and this is why we are still having in place this potential bullish harmonic pattern extension, this dark gray one. And of course I have to look after my microphone. It's a big microphone. Anyway, On the weekly, much later on, we will see the 200 EMA retest, and this if this 200 EMA will be broken, in that moment we had the 4-hour bearish, daily bearish, and much later on, let's say on the weekly bearish. But until then, on the weekly we are bullish, and we will look for a clear bullish signal, that means breaking the 200 EMA and of course these previous lower heights zones, in order to consider this bullish the higher time frame trend confirmed on the 4-hour chart. And in that moment, that is, let's say, the closest opportunity to our actual price action movement on all three charts, waiting for the bullish instead of waiting for a change of the trend that, let's say, will start from the 4-hour chart, and we have to wait the daily to confirm it, and much later on the weekly. If we will wait on the 4-hour chart to go bullish, we might have few hundred profitable pips to collect until this zone. And of course, if we will manage the positions later on by shifting our stop loss level in profit, we can call it a break even, and we will let it run. And in that moment, our swing trading position will actually, if the price action will continue this bullish trend and design new heights, will actually become a position trader position. And this is how I am using it. Let's skip to the next financial instrument. Euro Japanese yen. On the weekly chart, the price action is below the 200 EMA. We also had the crossing, the 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. And until further confirmations, any pullback to long is just a corrective swing to either retest the 50 EMA or the 200 EMA much later on. Anyway, right now the price action is holding on this previously broken resistance that acted as a support, so it's possible to act as a support in the future. Was previously broken here, therefore invalidated this support. That's why this resistance it is a powerful one. In case we will have a breakout, let's say, and the price action will reach the 200 EMA, we will still consider it a potential pullback to short area. Why? Because the price action is below the 200 EMA. Anyway, since the price action broken the 50 EMA, this means for us, the swing traders, stop trading long, stop trading short, unless the price action will drop again below the 50 EMA. And of course, in case we will break the 200 EMA later on, and based on my ideas of trading, including breaking this resistance, the next one after the 200 EMA, in which case we can prepare for a long position. That, of course, if this one, this idea, this bullish idea, it's confirmed on the daily and of course on the 4-hour chart. Until then, prepare for short below the 50 EMA, and of course we can expect, if this will happen, we can expect this next significant support to be reached. In case the price action will continue this direction, the bearish side, due to this crossing after this retest and the failure to break the moving averages, we can expect this to happen. Prepare to lock your positions around the 88.6 Fibonacci level based on this yellow Fibonacci here, because harmonic traders are usually using this level as a deep buying point. So we can expect a pullback probably in that moment to retest, let's say, this previously broken support that should act as a resistance in the future. Let's lower the time frame to daily, and on the daily we notice an opposite signal, an opposite crossing than the weekly. The 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup, even though the price action is holding around this previously broken support that should act as a resistance. In case we will continue this direction, we can expect this level to be retested. The next significant resistance, it's based on the price actions movement, and of course this Fibonacci level, it's an old Fibonacci based on this swing as a way to retest a proper previously broken support that should act as a resistance. And of course this one, it's in a confluence with the harmonic traders level. That's why we are having here this potential bearish harmonic pattern extension. But of course the final confirmation will be if the price action will break even on the daily the 200 EMA, and of course in that moment we will lock one more time our short position profits around this next significant support level. Hopefully we will see the same direction in the future and our swing trading position will act as position traders 1. Let's lower the time frame to the 4-hour chart. This is our December chart on the 4-hour chart. We were expecting a powerful corrective swing to retest the 200 EMA and probably this previously broken area, broken as a resistance, acted as a support around here. I'm not sure you see it properly. Let me see if I can select this. Okay, acted as a support and should act as a support in the future, which it did around here. Anyway, let me shift this back. We just have to readjust this pattern. This was a forecast one and we will place it here and of course here. Readjust the support zone. Could be a wider one, but this is the 4-hour chart. It's less significant for us. Just a second. I have to shift this next to resistance and the price action broken it and run above and below it for many times, and right now looks like the price action is below the moving averages. Therefore, if we will break this significant support, in that moment we will have the 4-hour chart bearish, daily bearish only if the price action will break the 200 EMA as well, and in that moment probably we will see on the weekly a drop below the 50 EMA. That will be the highest probability setup, since at least on the weekly chart, which is the main chart for us swing traders, the price action is running below the 200 EMA. We also had a crossing. That's why any pullback to long, it doesn't matter if it is a minor pullback or a powerful corrective swing, that will be just a corrective swing. For the opposite scenario, in case the price action, let's say, will design a new high, in that moment we will have to use that available from the daily as well, previous significant level broken as a support that should act as a resistance, and this is the reason why we are having here in place this blue bearish harmonic pattern extension. It is possible to have a powerful corrective swing for us for the short trend, but this will be a powerful corrective on the bullish side, and this might still be a sell signal, even though on the 4-hour chart, let's say, the price action will run above the moving averages. That, of course, if you will find the divergence on the charts, probably on the daily, or any other signal that might help you to take this decision. The easiest way will have to wait right now a drop below the next significant support, below the moving averages. We are already running below it, and if the price action will break this area, in that moment we will be prepared for short. That of course means if the price action will break the 200 EMA as well. Probably we will have here another intermediate swing on the 4-hour chart, probably the next one until here. We should see. I will adjust all these tools later on before publishing my charts. Let's keep to the next financial instrument, Australian dollar, Japanese yen on the weekly chart. The price action, it's retesting right now the moving averages, the 200 EMA. We had a crossing, the 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. Therefore, any pullback to long is just a corrective swing. It doesn't matter if this one it's until the 200 EMA. It's a powerful corrective swing, so it's great to see it like this. Any drop below the 50 EMA will mean the bearish term trend resumed. A breakout above the 200 EMA on the weekly or any other lower time frames will mean stop trading long, stop trading short, unless we will see all three time frames, 4-hour chart, daily, and of course the weekly, pointing the same bullish idea. Until then, highest probability setup remain for short. On the daily, we have a bullish situation and a bullish crossing. The 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup, and the price action looks like it's struggling to break a higher level. If we will have a drop below the moving averages, initially on the daily chart will be just a way to retest the previously crossed moving averages. Let's say around this significant support. It was a broken resistance, should act as a support in the future. It was a minor swing here, confirming this idea. Could be a wider one, maybe like this. Broken resistance acted as a support. It's possible to act as a support in the future in a confluence with the 200 EMA position. If this one will be broken, we will follow the weekly chart idea. We are running on the weekly chart below the 200 EMA, therefore bearish setup, and then in that moment on the daily will be confirmed if the price action will reach this level. For the higher high on the daily chart, have in mind that here we have a powerful resistance. It's the previous significant lower high than the previous ones level around this area. If this one will be broken, most likely we will see a change of the trend on the 4-hour chart in that moment here on the daily, and probably much later on the weekly chart we will have the 200 EMA breakout, probably this pin bar that was signaling us potential short, and in that moment we can consider a change of the trend from this weekly bearish to that bullish. Other than that, we will just focus on the bearish idea. As soon as the price action will drop initially below the 50 EMA, if the 4-hour chart will confirm us that we can go short safely. Why? Because the weekly is still bearish and running below the 200 EMA. On the 4-hour chart, we were expecting a pullback as a way to retest the 200 EMA. We had in December this 50 EMA breakout. We were expecting this retest, and after the retest, it was a forecast pattern. We were expecting a pullback from the 200 EMA. On the 4-hour chart, we were bullish. We are bullish right now. Both moving averages are slightly pointing north, therefore it's a bullish signal, but the price action must break again this resistance. It was previously broken here. This became the bullish fractal, and of course this bullish fractal must be broken here in order to consider a potential change of the trend from that weekly bearish to a potential bullish. But in order to confirm it, we need to see it on the 4-hour chart, later on the daily, let's say, with the same idea, breakout above this area probably, and much later on probably by invalidating this pin bar. Otherwise, we will wait on the 4-hour chart for the 200 EMA breakout. Sorry, this is an old previously broken resistance, acted as a support several times. It's possible to act as a support in the future. Maybe we can consider this as a rectangle. Probably we can adjust it something like this. Resistance, support. The price action can break on the upper side, on the lower side. The highest probability setup remain for short, or a change of the trend in case the price action will break and run above it. And this is that available from the daily significant high, our signal that we can see this bullish trend development starting from the 4-hour chart. I will personally wait for short. It's the easiest and the closest idea, and of course if we will have the opposite signal, of course we will see it on the 4-hour chart, but this means we will stop trading long, stop trading short until further confirmations for long. Let's keep to the next one. USD Canadian dollar. On the weekly chart, the price action is running above the 200 EMA, but just broken the 50 EMA. In case we will continue this direction of this breakout, we will see it as a way to retest the 200 EMA, and this will still be a deep buying point going for bullish. unless we will have a different confirmation from the lower time frames. Meanwhile, even though this one is pointing bearish, we are still bullish. On the daily, that bearish idea, that weekly 50 MA, it's already confirmed by this potential crossing. The 50 MA looks like it's preparing to cross the 200 MA from top to bottom. This is a bearish signal, a bearish setup, and we will consider this a potential early signal for a change of the trend, or a stop trading long, stop trading short until further confirmations. Either way, you shouldn't place trades when you see these situations on this financial instrument. Anyway, here I see a minor potential support zone, and of course, if this one will be broken, most likely we will reach this one here. And let me go for the short side to see here we have a bullish main trend line. Probably it's available on many time frames, but even though the price action will reach this level, this might still be a potential buying point for this potential bullish harmonic pattern extension in a confluence with the main trend line retest, and of course a significant support level. And in that moment we can consider a potential continuation of the bullish trend available from the weekly. That of course, if we will see this situation early on the 4-hour chart, and this one will be confirmed here probably by the divergence or something like that. It's very far away from our trading objectives for the next week or weeks. Probably you've noticed that lately, actually in the last year, my weekly technical analysis and market briefing actually didn't had weekly adjustments, sometimes because I take a few days or weeks off, but merely because the financial markets change the behavior due to fundamental analysis. Many instruments were ranging, or trends were invalidated, or false breakouts and so on. And I don't know, maybe I will make a new recording for the next week. Maybe it will come after 2 weeks or 3 weeks, or who knows, maybe 1 month. Why? Because I don't see the changes from our latest recordings. Anyway, right now this is the opposite signal for the daily, and let's see the 4-hour chart. On the 4-hour chart, we were expecting a retest of the moving averages as a potential change of the trend. We had here the crossing for the bearish, here for the bullish setup, but if you are looking closely, here it's a significant support level and here it's a significant resistance. Therefore, this is a ranging period of time. Of course, you can include this breakout here and this next significant support. It's a wider area but still act as a rectangle, and the price action, it's moving above and below the moving averages, therefore opposite crossings and so on. It's really difficult to consider a signal when you see these changes between a resistance and of course a support, especially on lower time frames. Like for us, the swing traders, it's the 4-hour chart, but we are always expecting a proper corrective swing. And of course, if we would have had here, let's say, a failure to design a new low, instead of that we would have had a new impulse in the direction of this crossing, we would have considered this trend development starting from the 4-hour chart. It's not the case here. We had a pullback. Of course, it was a different setup. This one was a forecast pattern, and we should have either used it like this. It wasn't a healthy corrective swing. Okay, like this, a retest of the 200 EMA, and here we would have expected the 50 EMA to be broken in order to consider this setup and this crossing for the bullish side. Since we didn't have this situation, the 50 MA failed to be broken. Instead of that, we had a new impulse. On the bearish side, of course, much later on, we had this crossing. The 50 MA was crossing the 200 MA from top to bottom. This is a bearish signal, a bearish setup, and the price action reached new lows. I'd like to measure here with the Fibonacci just to see our usual 127.4, 132.8. Yes, it is in a confluence with our previous significant support zone, so we just widen this area, and we will consider this as a potential deep buying point based on this dark gray harmonic pattern extension in case the price action will reach this level. Anyway, we had a crossing, the moving averages were retested, including with this false breakout of the 200 EMA, and of course this significant resistance, and the price action looks like stopped around here. Therefore this will become our 4-hour chart significant resistance. We will still be able to use this old one, and right now, let me see, yes, this is a significant for the 4-hour chart based on this new low, and actually new lows area, and this one is in a confluence with the 50 MA. So breakout below the 50 EMA area, below the 200 EMA after the retest, below the 50 MA, retest of the 50 MA, a new low, and right now it is possible to have a new retest of the 50 MA. Let's see if the price action eventually will break it in order to aim for the 200 EMA, and we will have here something like a W letter, a potential bearish harmonic pattern, or a new impulse in this direction of this crossing, and moving average is pointing the bearish side. And of course in that moment we will focus on this let me change the color, I will readjust it later on, but just to have a different color than the previous Fibonacci tools. Anyway, this 127.4, 132.8, and of course the next one will be the 161.8 in case we will have a new impulse that will last on the 4-hour chart until this level. 4-hour chart, sorry, we are running below the moving averages, daily below the moving averages, so we might have a potential change of the trend, but for the weekly chart this is just a corrective swing. And the problem with corrective swings that, let's say on the weekly, will be just a way to retest the 200 EMA. If we will break the 50 EMA, we don't know for sure where this corrective swing will stop. That's the main problem. A healthy corrective swing is 50%, ideally it's 61.8, the golden ratio Fibonacci. But due to this weekly setup, we don't know where this short will stop. That's why the highest probability setup will be to have the 4-hour chart, a new breakout, and run above the 200 EMA. Later on to have the same setup on the daily, at least to break the 200 EMA, and both of these ideas will be in the direction of the weekly chart idea and trend bullish, and that of course will mean the 50 EMA from the weekly will be broken, and we will safely take our long position as a continuation of the bullish term trend, or the bullish term trend resumed. Otherwise, all these opposite signals might be considered a change of the trend development, and we will stop trading long, stop trading short until further confirmations. And of course on the daily this is very far away from our weekly objective. We need to see this level broken as well. We can take our short position here, but it will be 50% risk for us, because here we have the new low, and the trend signal for the bearish side will be if the price action will break this low. So we have this is the higher high for the bullish side, this is a low, here we have lower heights than this one, so it's a signal of the strength of the trend weakening actually. And of course we need to see this level broken to have something like an A, B, C, and potential D, where the AB equals CD, or the CD it's actually 127.4 from AB, or the opposite scenario where the 127.4 from AB equals CD. And these are special cases, and you shouldn't focus blindly these patterns unless you receive the proper confirmations like I pointed you earlier. I will adjust all these tools later on, and let's skip to the next financial instrument. Australian dollar USD. On the weekly chart, the price action just broken the 50 MA, aiming for the 200 MA retest. We had a crossing, the 50 MA was crossing the 200 MA from top to bottom. This is a bearish signal, a bearish setup, and until further confirmations, any pullback to long will be just a corrective swing, exactly like I pointed you here with this potential bearish orange harmonic pattern. Maybe we can consider the price action movement here, and I will spend a while to explain it to you. Here we should have expected a new low, which it did. It is a new low, but this breakout was invalidated by a new high, and due to this idea, here was a false breakout. Therefore, strength of the trend, which are actually awakening for the bearish side. A new high. This new high must be broken in order to consider a potential change of the trend. That's based on different strategies, okay? The first one is price action, pure price action movement. The price action must break this level in order to consider a potential change of the trend from this previously bearish to this potential bullish, okay? But what if we will consider here simple support and resistances as zones in my case as a swing trader? So we had a breakout of the support, acted as a resistance, so it's possible to act as a resistance in the future. Not to mention that this is a key level based on this last swing. This is the proper swing. It's a lower high that we started to draw our Fibonacci. Why? Because here after the crossing, therefore this potential bearish trend development, this one was the swing retesting and the start of a new impulse, and we had a new low, therefore this one became significant, okay? So we measure with this lime green Fibonacci this whole impulse, and this is just 50%. So this 50% level, it is in a confluence with price action movement. This previously broken support acted as a resistance, is possible to act as a resistance in the future. And here we can add the moving average strategy, the third one, which it is the 50 MA was crossing the 200 MA, and after these crossings we retested just the 50 MA several times, including here the breakout, and of course until now we didn't retested the 200 MA. So this level, it's a key significant level. It's still a sell point for us if we will see the same setup on the daily in that moment, and of course the 4-hour chart, because here we have the harmonic patterns, the Fibonacci traders, the moving averages traders, the support and resistances traders, even though the price action is very far away from the main trend line, which it is bearish, and here it's that level. So we had a powerful bearish impulse, or actually trend, but impulse, and very far away from the main trend line. The price action might always like to retest the trend lines, and these other strategies might be considered early signals, early strategies, early point of views, signaling a potential change of the trends. But until here we are still bearish because we are running below this moving average. Therefore, the easiest way and the closest way to our weekly trading objectives, let's say, will be a new drop below the 50 MA, and of course this significant support, it was broken now, should act as a support. If this one will be broken, invalidation of the support, the price action might retest again, and who knows, maybe we'll continue this bearish idea since we are below the main trend line, below the 200 MA, below the 50 MA. Therefore the highest probability setup will remain for short, therefore for a new low. That's why we are using all these tools in order to take the highest probability setup. It doesn't matter how good you are in trading. If you will forget about the math and you will just flip the coin, you will have 50%, 50% to be right, okay? You can go long or short. There's no other way. Of course, it might range for a period of time, but eventually we will have a breakout, and that breakout will be on the long side or the bearish side, or the short side. Okay, in our case here, based on all our multi-tools used on the weekly chart, where things are happening slowly, point us the highest probability setup is short. Even though here we have a bullish swing, it's just a corrective for all the tools and for the weekly chart, even though on the 4-hour chart and maybe the daily, let's say, will be a bullish signal. It's a bullish signal or a potential bullish trend in development, must be confirmed before taking our highest probability setup as long. Our highest probability setup remains short. And let's focus on this idea and lower the time frame to daily. On the daily, we had something like a failure around here, several attempts to break this resistance, which right now is just falling. This is the daily chart. Anyway, we had here the crossing, the 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. The price action stopped exactly at our previous significant for the higher time frame zones at this support, broken this as a resistance, might act as a resistance in the future if the price action will reach this area, or in case we will continue this direction and still design here a new high above these lower heights, the price action could stop. Sorry, hard to select these tools sometimes. Anyway, around this next significant resistance. Our idea here could be a false breakout of this resistance, and this will become the bullish fractal that must be broken in order to confirm this direction. And looks like this is preparing for crossing the 50 EMA, is preparing to cross the 200 EMA on the opposite direction, on the bullish side. After this crossing, we should see here the bullish fractal, a corrective to retest minimum 50, the 50 EMA area. Ideal, of course, would be a healthy retracement around the 200 EMA, and of course in that moment a bullish fractal to be broken in order to consider the bullish position. Otherwise, we are still aiming for the 200 EMA retest on the weekly. I know it might sound confusing, but try to replay these videos and see my point of view on multi financial instruments and see how I read charts, and eventually you will realize why I take my highest probability setups and very rarely I'm wrong on the 4-hour chart, because I'm trading what I see and not what I think or want or what I hear from news. I combine all these ideas, of course, including with the trader sentiment, which our main tool remained the commitment of traders reports. And due to this multi-analysis, I take my highest probability setup. You might think it's 50-50% between short and long, but if you will add extra analysis tools, you will increase one side and decrease the other side chances to be right. Okay, so based on these ideas, why flip the coin and take 50-50% when you can increase slightly? It doesn't matter, it's 51% versus 49%. Okay, for long, for short, it doesn't matter. In the end, if you will take the highest probability setup over and over and over again, let's say you will be right 7, 8, 9 times from 10 trades. Even if you are having 5 trades positive and 5 negatives, if you will have a ratio minimum 1 to 3 as harmonic trader, swing trader, you will have more than 1 to 3, 1 to 5 risk reward ratio. By having 50-50% and by having 50 of your trades, 50% of your trades positive and the other 50 negative, you will still be positive on the long run. And due to this idea, if you are increasing the probabilities, mathematical probabilities, by using these tools, you will actually have 7, 8, 9 trades from 10 in profit. That's huge by having a risk reward of 1 to 3, of course. Anyway, bullish on the daily. Let's see the 4-hour chart. And on the 4-hour chart, of course, we were expecting for the weekly chart a retest of the 4-hour chart 200 EMA. That's why we were having here in place this as a forecast tool, the potential bearish harmonic pattern extension, aiming for the same direction of the weekly analysis. Oops, sorry, I think this one was lower. Let me use it here. We should have readjusted this chart. It was a December one. Okay, pullback here on the 4-hour chart. We had a crossing, and after the retest of the 200 EMA with a false breakout, the price action designed a new low. We were expecting somewhere to find a pullback, and we find this level to be the highest probability one. A failure to design a new low might design a powerful corrective swing that eventually will break the 50 EMA, which it did. A retest of the 200 EMA, probably around this area where we had the next significant resistance. It was a previous support, broken as a support, should have acted and did act as a resistance for a while, but eventually the price action designed a new high, and we had the opposite crossing. This means stop trading long, stop trading short. In fact, by breaking this bullish fractal here, stopped trading short, which was the highest probability setup for the weekly, and wait for a new drop below the moving averages, or draw here the opposite trend line, whatever tool you are using it for the short signal. This is the highest probability setup still, even though on the 4-hour chart and of course the daily might look differently. So I will wait here a new drop below the 200 EMA, and of course in this scenario I need to see this support broken as well in order to consider my short position. I will lock my short position here, around here, expecting a higher low than the previous ones, or maximum like actually this will be a 4 tap, not a double bottom, not a 3rd tap, a 4th tap of this previous significant low. And of course I expect here pressure from the buyers, even though I will have the highest probability setup and the highest probability trade. Right now, if we will see this continue for the bullish side, and we will see it on the daily, that means breaking these previous heights in order to reach these resistances, probably much later on we will see this 200 EMA broken. But this is too much distance for our trading objectives to wait in order to consider a long setup for this pair. That's why the highest probability setup, and I'm waiting for a proper signal, is the short side, as long as the 4-hour chart price action movement will drop below the moving averages. I will design you later on here some potential bullish harmonic patterns, and we will look for the invalidation levels, but probably will be around this area. Here it's a powerful bullish impulse. 50% of this bullish impulse probably will be 50% will be here in a confluence with this 38.2, 61 here close to this wider area, our previous broken resistance that acted as a support. So it's possible to act as a support in the future. That of course if this one is the bullish trend in development. By breaking this level much later on, we will go for the short side, which remain our highest probability setup based on the weekly chart. Let's keep to the next one. New Zealand dollar USD on the weekly chart. The price action is holding right now on the 200 EMA area. We had a crossing, the 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. And here we had the lower band of an old triangle. It was broken on the upper side, but the price action failed to design a new high above the previous significant high. Therefore, we had to remove the upper band of the triangle on the direction of that breakout, because the price action eventually came back, and after the retest of the lower band, broken it, and this acted as a trend line. It's not the main trend line. If you see it properly, the main trend line probably should have been around here. Readjusting it accordingly to this movement, broken it probably around here. Anyway, I just let it in place to have a visual content that we are running on the short side. This one was already confirmed by the moving averages crossing, and we are here right now. After powerful impulses, eventually the price action retested and broken the 50 EMA, failed to design a new low. Instead of that, design a higher low than the previous ones, and of course we had a powerful impulse to retest the 200 EMA, which it is running kind of flat right now, but we had here a pin bar and of course a new low. It's a higher low, but after that we had new lower lows, lower high, therefore a bearish trend in development, which means based on this crossing this lower band of this old triangle breakout, bearish term trend potential to be resumed. In order to do that, the price action must drop again below the 50 MA. Of course, this one became the bearish fractal that was created during the initial breakout of the 50 MA, and this one must be broken in order to consider the bearish term trend. Otherwise, we might have a potential change of the trend, which means breaking this 200 EMA right now, in which case we can expect the price action to reach this level for the bullish side. That's why we are having still here in place this bearish harmonic pattern extension. That of course, if we will have the same setup on the 4-hour chart and maybe the daily, the same signal. Highest probability setup remain for short still on this pair because we are running below this, running flat, but still a powerful resistance, 200 EMA on the weekly chart. Let's lower the time frame to daily. And on the daily, we have the opposite signal right now. We had here in the direction of the weekly, the 50 EMA crossing the 200 EMA. This is a bearish signal, but here the price action stopped at our previous significant for the price action movement support zone. Therefore, this was a potential area to lock our short positions. Anyway, in case you took it, here the price action invalidated this breakout, and this bearish fractal failed to be broken in order to consider a new impulse on the weekly chart. We are on the daily, but we are able to see it, and we received the opposite signal. Initially by breaking the moving averages after the price action broken the 200 EMA, stop trading short anyway, but stop trading long because it's not our weekly trend. After that, we noticed this 50 EMA crossing the 200 EMA, and both of them are pointing north, which is a bullish signal, a bullish setup. In order to consider this bullish trend, we must see the same signal on the 4-hour chart daily, and of course much later on the weekly, since on the weekly the price action is holding on this running flat 200 EMA. So if we will have all three time frames aligned in the same direction, we can consider it. We saw it on the 4-hour chart, much later on the daily, and much later on the weekly chart, and we saw the bullish trend development or a change of the trend from bearish to bullish. Until then, we will be prepared for short. Here we kind of having this W letter inside of a bearish channel. This is a bearish channel, but I won't draw it on this chart. I try to keep my charts as clean as possible for you, in order to not create confusion, but sometimes we need some tools, and I will place it and leave it there on our charts. Anyway, if the price action right now, let's say, will design a lower high than the previous ones, could still be a bearish signal. And if this will be confirmed on the 4-hour chart, since it is in the direction of the weekly chart, even though here on the daily we are above the moving averages, so it's bullish, we will still take a short position. And that of course will be a 50-50% to be right, because like I pointed you, on the weekly the moving average is kind of running flat. Even a minor breakout on the weekly chart could still be something like few hundred pips, or I don't know, at least few tens of pips, but we can have our chances to be right if on the 4-hour chart we see a bearish term trend resume. It will be our weekly chart direction, and we will have an early signal with probably a minor stop loss level here on the daily. At least if we will measure this swing here, it will be something like 150 pips for position traders. That's not much, that's normal. For a swing trader might be a little too big, but It's up to you, it's up to your management, money management. Anyway, let's see the 4-hour chart right now. On the 4-hour chart, we have the same bullish idea as on the daily, but it's different than our weekly. So we should wait for that weekly to be broken in order to consider a bullish trend. Seen it on the 4-hour chart, seen it on the daily, and of course much later on the weekly if this one will be broken. Anyway, on the 4-hour chart, we were expecting the 200 EMA to be retested. It did much later on. This was a forecast tool. You should have readjusted like this. It would have been the same level of the 200 EMA. We already reached the profit target for this pattern in case you took your short position in the direction of the weekly chart. Anyway, if we will add this one here as the extension in case the price action, which it did, will design a new high, we were expecting this to stop for a while around this area. Maybe it was here, something like a pullback. We had a crossing, therefore eventually the price action designed an opposite signal. The 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup. Any pullback to long, at least for this chart and this pattern, is just a corrective swing and the way to retest the moving averages. Looks like the price action broken here with a false breakout. This significant resistance. Initially, this one was still holding, but the pressure from the buyers was around here. Seeing this development probably on the intraday, we had a retest of the 50 EMA. You notice since this crossing we didn't have not even one retest of the 50 EMA, and if this one will fall, if this one will be broken, most likely we will see the 200 EMA retest, something like an M letter as a bullish harmonic pattern. That of course, if we will notice a potential signal for breaking that weekly 200 EMA, we can take that position, but the highest probability setup for me remain for short. I rather wait for the 4-hour chart, the price action to drop below the 200 EMA in order to take my short position. Later on the daily, that means the swing, let's say, that will retest the moving averages. Probably the 50 EMA will cross back the 200 EMA and both of them are pointing south. And of course, much later on, we will notice this as a rejection from the 200 EMA as a failure to break it. Therefore, much later on, the 50 EMA breakout and the running below it, designing a new low, will basically mean the previous bearish term trend resumed on the 4-hour chart, daily, and of course the weekly. Until then, stop trading long, stop trading short, unless you will see a buying opportunity thinking that the change my trend, though I would not recommend it, especially for one of my favorite pairs. I kind of know the New Zealand dollar for a longer period of time, and I doubt that you can take with less risk a long position right now, since the weekly is pointing us otherwise. Let's keep to the next financial instrument, and we will start with the silver on the weekly chart. I've told you earlier that I will speak something about it probably later on the gold, but both of them, gold and silver, represent the refugee investment tools. Every time you will notice confusion on the markets, swing traders, position traders, big investment companies, and of course hedge funds will try to own these refugee investment tools. And based on this idea, probably you are wondering what happened on the markets of the silver and gold, at least. And I will tell you later on the gold. Anyway, right now we are above the bearish main trend line. We broke it, even though we had this crossing and until now wasn't invalidated. The 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. Let me see if I can shift it like this. Yes, just to have a bigger picture, okay? So we had this crossing and we are running below the main trend line, which remain bearish. We had to readjust it several times, which we might do if we will see it right now after this height, a pullback to short and the new low. We will have to readjust it and connecting this point with this height, the height with the lower high. The same thing happened here. We broke it several times and the price action, at least for now, failed to develop the bullish trend, which for the refugee investment tools and especially due to our situation in the last years, we should have seen it. We didn't, and you will understand much later on why on the gold. Anyway, right now we can consider this retest and breakout of the 200 EMA a false breakout. Why? Because the price action eventually dropped below the 50 EMA. It's the same situation that I pointed you earlier on the New Zealand dollar. When on the New Zealand dollar the price action was holding on this 200 EMA, could be a false breakout. If you will measure here, it's something like 227 pips. So this is a huge distance for a false breakout in order to still take the highest probability setup, which remains short. And this false breakout, we didn't knew back then it will be a false breakout, but based on the moving averages principle, at least on the weekly chart, the 50 EMA was crossing the 200 EMA from top to bottom, and we didn't have the opposite signal. Therefore, the highest probability setup remains still short, even though here we had this false breakout and a period of time running above the 200 EMA, we didn't had the opposite crossing, the 50 EMA to cross the 200 EMA from bottom to top in order to consider a potential change of the trend from previously bearish to bullish. That's why eventually the price action dropped below the 50 EMA after retested, design a bearish fractal, and right now retesting the 50 EMA. This week this next week can end with a bearish candle, with a bullish candle. It doesn't matter, as long as the price action will remain and run below the 200 EMA, we will still take our highest probability setup as short. Anyway, right now we might have to use here a minor support zone, and we will use it here based on price action movement. And of course our usual levels 127.4, 132.8. This magenta Fibonacci, it's added here on the counter trend from here to here, but I have to shift it on the right side just to have it here one nearby other Fibonacci tool. Anyway, right now this 127.4, 132.8 remain our key support level. It was broken here in order to retest the 161.8. It's still the counter trend, okay? And the price action even entered this area where was the previous Fibonacci tool, but this is the counter trend and this remain our significant support. Probably we are already having this on the daily, but I'd like to see it here on the weekly from now on as well. Here was a false breakout, let's say, though we don't see shadows on the bottom side below. We don't see a closed candle below this support. It wasn't a breakout, but let's just say due to these shadows on the bottom side. Support acted as a support, broken as a support, acted as a resistance, acted as a resistance, broken as a resistance, acted as a support, acted as a support. So it's possible to act as a support in the future. I'm sure we have this one on the daily, but I'd like to see it here on the weekly as well. Anyway, and probably this one we will let it on the daily only. It's the 50 EMA area for the weekly chart. And of course this one, based on the price action movement, it's a key significant level as well. Therefore here we can have a resistance, and even though the last week, this week, we were closing with this bullish candle above the 50 EMA, we can still have time next week or weeks to have a bearish impulse, but initially will be a corrective based on this bullish swing on the 4-hour chart. And if we will break this significant support, most likely we will aim for this next significant one, which is the previous significant low area. And of course, if this one will be broken, we will use this level to lock our profits, because here we have the 161.8 based on the next counter tree swing. This was the magenta, and right now we are using this Fibonacci. Hopefully you will see it. Anyway, you can zoom later on my final charts. And we will use this as our significant support just in case the price action will design a new low. Anyway, right now, if the price action will continue this bullish idea, we will wait for the 200 EMA retest, and if we will notice on the 4-hour chart, probably later on the daily, the same direction, it will signal us our rejection from this weekly analysis, weekly 200 EMA, and in that moment we can go short at this weekly 200 EMA. Otherwise, I will safely wait a drop below the 50 EMA on all 3 time frames in order to take my short position. Let's see the daily. Sorry. We were on the opposite direction. The 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup. We were expecting this 200 EMA to be broken, to be retested, sorry. It was broken with a false breakout initially, because the price action went again above the moving averages, including above the 50 EMA by breaking it, but stopped around here. So this was a potential pullback to short. It was the entering of this 127.4, 132.8. It's based on that previous counter trend that we saw it earlier on the weekly. And of course, due to this idea, we were expecting a pullback to long, again, at least to retest the moving averages, since here we already saw the crossing, the opposite, crossing the 50 EMA, crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. In case the price action will continue now or later this direction, we will wait for a new pullback. We will expect a new pullback around this 127.4, 132.8, this blue Fibonacci level. It is in a confluence with this older white added on the counter trend as well, so it is a powerful support level and of course a key level for the harmonic traders. Right now we are focusing on this resistance. It's a previously broken resistance that acted as a support, broken as a support, acted as a resistance, so it's possible to act as a resistance in the future. A new drop below the 50 EMA will be considered a rejection from this resistance in order to aim for the weekly bearish direction. Let's see the 4-hour chart. And on the 4-hour chart, we were bearish. We had this crossing, the 50 EMA was crossing the 200 EMA from top to bottom. And of course, after several attempts to retest the 50 EMA, we were expecting the 200 EMA to be retested to the pip. After this retest, we were expecting new impulses, but also new corrective swings. And the powerful corrective swing should have lasted until the 200 EMA, which it did. This was a forecast pattern back then. Hope you did readjust it properly yourself. Anyway, sorry. And after this retest and of course a false breakout of the 200 EMA, the price action retested the 50 EMA, which back then was slightly pointing north, signaling a potential opposite crossing, and the price action broken this bullish fractal that was created during the initial breakout. We saw the crossing, the 50 EMA was crossing the 200 EMA from bottom to top, which means stop trading short positions because we have an opposite signal on the 4-hour chart. Anyway, the price action stopped for a while at this resistance previous broken support, acted as a resistance, several times, significant resistance right now, several times, anyway, broken as a resistance, and right now it's acting as a support. It's a significant key level. Okay, so we might have a change of the trend, but in order to consider this, we should readjust this chart, and this time I will draw it like this. Doesn't look good, but will do the job as the potential bearish harmonic pattern extension. I will use it here, even though here we have two key significant levels, the 61.8 magenta Fibonacci and this 50% yellow, both of them added on the counter trend. This is a much bigger counter trend move measurement. Okay, if the price action will drop again below the moving averages, especially by breaking the 200 EMA, we will be prepared for short, and we will lock our trades around this previous significant low area, expecting that if the price action will break and continue to reach this next significant level where we have the 261.8 based on the same yellow counter trend Fibonacci, and this one will be in a confluence probably with this 132.8 based on this much bigger and much older swing counter trend. Let me shift it. It's here. You hope you see it. Okay, probably should have been here, but it doesn't matter. It's almost the same level. Could be a distance of 10 pips, could be overlapping this. Anyway, this is our key level in case the price action will design a new low in the direction of the weekly, which will remain our highest probability setup as long as the price action will drop below the moving averages on the 4-hour chart. If the price action will continue the bullish idea, we should see the same setup later on the daily. This means by breaking this resistance in order to aim for the next one. And of course, on the weekly chart, this will probably mean retest and hopefully a breakout of the 200 EMA later on. And this will be our next key resistance. The previous lower high area is our profit target, initial profit target, or just a way to lock our trades for the bullish side. Until then, highest probability setup remain for short on the 4-hour chart. And let's skip to the next financial instrument, gold. And I told you earlier that I want to say something about this refugee investment tool. You see, many people consider gold has no value anymore, especially due to this drop. Why is this happening? Because I pointed you this drop more than 3 years ago. If you will watch my videos uploaded somewhere online on all my communities, you will notice I pointed you these levels, making projections based on counter trend swings, and pointing you this when people actually preparing for more than $2,000 the price for gold. And why I saw this? Let's take this example, and yes, because of this I agree with the United Kingdom citizens. If you will Google your national bank currencies, reserves, currencies, and you will check on gold from your national bank reserves, you will notice that at least on the European Union, since 2007, when my country joined the European Union, the gold reserves dropped. Right now, the gold reserves for National Bank of Romania are actually around 10% from what it used to be before 2007. This is a directive of the European Union, and this is something that I don't like, and I don't like that when my country joined the European Union, the big countries from the European Union, Germany, France, and United Kingdom, said something like, okay guys, we welcome you in this big almighty European Union. And Right now, they decided they don't like the European Union, so they voted to exit from this union. Initially, was a commercial agreement. Yes, European Union wasn't in the beginning what it is today. It was a commercial agreement between countries around Europe, and they end up using the same currency. And yes, due to this development, due to this what it is today, the European Union, they decided to promote laws and create directives, and one of them is related to gold. And I've I forecasted this because they wanted, since the crisis started, they wanted to reduce the reserve, the national bank's reserve of gold. You can check those charts to see if I'm right or not. Anyway, so I forecasted that the price of gold will drop. Basically, what they did, they found a solution. It was a good solution, but only for a shorter period of time. Right now, uh, I don't see this with good points of view, uh, and I will tell you why. They sold some amount of gold. Of course, the plan was running for many years, so they sold a percent of gold. The prices drop on the market. They sold again. They sold again. They sold again. They sold again. We are here today. What they did with those money, they were invested it into economy, collapsing economy. Uh, in that moment, they actually found a good way to point us, oh, there's a economical growth. No, it wasn't. They were pumping money, those money that were coming from selling this gold, and I kind of foresee this. You can check my videos, even though I'm not sure I pointed you this idea ever into my videos, but I pointed you the levels because I kind of foresee this as fundamental analysis. Anyway, I'm telling you right now, all the countries from the European Union are having now 10 to 15% from from those gold reserves that they had when they joined the European Union. So right now, basically, they say gold has no value, and I see this on all the markets, all the media, and I'm telling you my opinion about this. I think gold will always have its intrinsic value, not as a financial instrument, but imagine this: we are using gold for thousands of years, and we will use it probably, at least on our lifetime, we will use gold not as a currency, not as an investment tool. We use gold for technologies. Imagine that every computer, every phone, every, I don't know, engine will have some small amount of gold. When we drop that phone, that computer, that engine, it's actually more expensive to recover that gold. So we are using this, it's not endless resource, it's not renewable. So we are using gold. We will use gold, and imagine this: if you don't know anything about the markets and you just have money, you work hard, you have money, how you are going to keep your savings, your economies? Uh, my advice will be gold. Why? It's cheap right now. It's highly liquid. Imagine you can always take your jewelries to the pawn shop and you will have cash faster than your credit card on your bank account, right? And of course, if something will happen on any markets, like we saw lately, or at least in a last decade, you will pay with that gold, that jewelry, that small part, anything you want. Because people that will have some resources, they will say, okay, I will sell this, I will take gold, and when everything else will go, I will have gold and I will be rich. Gold will always have intrinsic value, even though right now on the market might look like it doesn't. It will, and unless we will have a news something like we landed on an asteroid or any other star, and we found gold there and we collected it and it's cheap to take it back to Earth, uh, we won't have other option than using gold and of course other precious metals for our technologies. While developing our humankind society, we will need technologies, and these technologies will always rely upon gold. Trust me on this, and probably this won't change during our lifetime. And right now we will watch the charts and we will see if we will find an opportunity to trade gold as a financial instrument this time. It's fiduciary gold, it's not gold bullions or gold jewelries. It's gold that we are using it on the market, especially for technologies. Okay, so on the weekly chart, the price action is below the main trend line, which remain bearish. We had to readjust it here since the price action designed a new low after the initial breakout. And of course, due to these ideas, we had to connect these 3 points right now, and look like the price action is ranging sorry, for a period of time. It's indecision on the market. People still don't know if it's time to buy gold or not. They might find other short-term investments, but on the long run, I think this will change. Let's focus on the moving averages. We had a crossing. The 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. We had here a retest of the 200 EMA after the crossing, but after that we didn't have a retest of the 200 EMA until here. Anyway, here, since the price action broken the 50 EMA, after the retest, we noticed that the 50 EMA is slightly pointing north. This is a bullish signal. It's based on the clock counting. Imagine it like this. If it will point you 3 o'clock, in that moment you will have a ranging market. If it will point you 1 o'clock, you will have a bullish. If it will point you, let's say 5 o'clock, you will have a slightly bearish. Okay, so here I was pointing us bullish. Anyway, after this breakout of the 200 EMA and the breakout of the bullish fractal, which actually pointed us a bullish signal around here, we retested this point, and after that we had a new drop below the moving averages. This became the bearish fractal created during the initial breakout from top to bottom of both moving averages, and eventually here the price action dropped. You have to read it. This is gold versus dollar, United States dollar. Anyway, and the price action broken even this next. It's medium. It's available for the weekly chart, but it's medium, and we will see it as a powerful support or resistance on the daily much later on. Anyway, the price action broken it, and right now looks like it's acting as a resistance in a confluence with the 50 EMA. We can consider this as a new crossing like we had here. If the price action will design later on, this will be confirmed as a new crossing. Okay, if the price action will go again above the moving averages, most likely we will retest this resistance again in a confluence with the main trend line, bearish main trend line, and if this one will be broken, in that moment only we will have the confirmation for going long on gold. And this is the opposite of what I've told you earlier, based on the fundamental analysis. Anyway, right now we will lower the time frame and see the daily. We had a crossing in the direction of the weekly chart. The 50 EMA was crossing the 200 EMA from top to bottom, and after this pullback we broken the 50 EMA, and the price action it's right now below the 200 EMA in the weekly direction, but above the 50 EMA. So stop trading long, stop trading short. This is also confirmed by our support here and our resistance here. This 200 EMA must be broken and the nearby resistance in order to consider a long position. A drop below the 50 EMA and of course below the significant support will give us a short opportunity, if we will see on the 4-hour chart the same setup, to go on the weekly direction at least until here where we had the previous significant low. And of course if this one will be broken, we will lock our positions again here where we have the support zone and of course these bullish harmonic pattern extensions. Let's lower the time frame to the 4-hour chart. And on the 4-hour chart here we had these crossings. The 50 EMA eventually crossed the 200 EMA from top to bottom. This is a bearish signal, a bearish setup. Until here we had retests of the 50 EMA, but not even one retest of the 200 EMA. After powerful impulses, you should always expect powerful corrective swings, and these corrective swings should retest the 200 EMA and of course the 50% Fibonacci level and ideal 61.8 the golden ratio Fibonacci. By measuring with this Fibonacci the whole swing, we will notice that 50% level, it's around here, so we are so close to reach a healthy retracement, a healthy corrective swing, even though the price action right now is currently running above the moving averages. And on the 4-hour chart, the 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup. And after this crossing, even the price action retested the 50 EMA, confirming that this was a potential bullish trend in development. Right now this became the bearish fractal that was created during the initial breakout and must be broken by the price action movement if we will have the weekly trend, which remained bearish, resumed on the 4-hour chart as well. And in that moment we will go short again. Here, broken as a resistance, acted as a support, acted as a support, acted as a support. Is possible to act as a support in the future. That of course if the price action here will fail to design a new high. Meanwhile, we will still use this resistance. Let me check. Yes, it's a previous broken support and should act as a resistance in the future. Okay, and this is the intermediate level. It's available for the 4-hour chart. It was a powerful resistance, false breakout here. Looks like a breakout here, and this pin bar here at the 50 EMA retest failed, at least for now, to break this support. So if the price action will remain above it, most likely we will reach this level. And if this level will be broken, we need to see the same setup on the daily, which means 200 EMA broken, and I will wait even this next significant resistance to be broken in order to confirm a potential change of the trend. Starting from the 4-hour chart, bullish on the daily, and later on bullish on the weekly by breaking the 200 EMA. And even though we are below the bearish main trend line from the weekly, I expect this to be broken in order to confirm the bullish term trend, which in my opinion it's the right thing to see on the longer run for the gold. Until then, 4-hour chart is bullish, but it is the opposite signal than the weekly chart. So if the price action will go below the moving averages and this key significant support, I will be prepared for short at least until this area where I will lock my short position. And of course the next significant one, which will probably be useful from now on, we will have it here, and a potential bullish harmonic pattern extension based on an old, I'm using this for visual content, it's not a proper harmonic pattern, but since it's based on the Fibonacci tools, and this is the counter trend, this is the blue Fibonacci 161.8, the first level was here. We already reached the 132.8, that's below the previous significant low, and since this one was broken it here as a resistance, we will consider all this area an invalidation of the previously breakout to design a new low. So it is a potential change of the trend. That of course, unless we will have a new drop below this moving averages, this support, in which case we will expect actually a new low on gold. That's crazy, right? Okay, let's keep to the last financial instrument, oil, on the weekly. And I have to tell you something about oil as well. Uh, Guys, I love nature, but we need oil. Um, I, I've said it long time ago, green, it's our new bubble. I know you don't believe it, but look in the history. We have the tulips bubble, we have the real estate bubble. Why not having a green bubble? For example, if you want to protect the nature, I love nature. I spend more time in nature probably than most of you. I love forests. I love everything, but we need oil. There's no way you can find a better price right now for the technology to use other renewable resources than the oil. Okay, so if you want to protect the earth, you should not use oil. So you should buy a car that has an engine that doesn't use oil. Okay, uh, I don't know, I will use random numbers, but I'm guessing you will pay twice as much as an oil engine for your car. And why is that? Okay, new technologies are expensive, but if you want to protect nature, you should have it at an affordable price. It's not, so we will still use oil. I bet we will use it until the last drop. Unless you will see news, we can't find oil anymore. In that moment probably we will have a higher price for the oil because it's the last resources. Okay, and in order to use oil and to have it at a higher price like it should, because it's obviously we won't have it for long, maybe 50 years from now on, but not longer. Okay, during this whole period of time we will use gold, but only if the economy works. So I'm launching here a new idea. Oil, it's a trend pointing indicator for the world economy. Why? Because if we don't use oil, if the economy doesn't work as good as it should, in order to keep us at the floating level, the price for oil will be low. That means we are not using it. Even if it's free, we don't use it. So it's not free, it's just cheaper. This is a signal that the economy, it doesn't work as it should be. So as it used to be. Anyway, so we will use oil until the last drop, and we will notice we won't have too much resources if the economy will work as smooth as possible. In that moment we will have a higher price for the oil. That's my fundamental point of view on the oil. Anyway, based on the technical analysis, we will always focus on that, no matter what I believe or what you believe or what others might believe. It doesn't matter. It will matter in the end that we as retail traders, we are just small fishes in an ocean full of sharks and I don't know, other creatures, other living beings. Anyway, if they will use oil, it doesn't matter what we believe, the price will go higher. Based on the technical analysis, the 50 EMA was crossing the 200 EMA from top to bottom. This is a bearish signal, a bearish setup, and this was signaling that the economy is going worse than ever. Okay, so we are here right now, and the price action looks like, at least for now, stopped around the 161.8 based on this last counter trend, sorry, Fibonacci, this blue one. Anyway, here we have a breakout of the 50 EMA, and after many ups and downs above and below the 50 EMA, the price action decided to point us and to aim for the 200 EMA retest again. This is normal, and of course it's normal based on the swing trading principle. After powerful impulses you should have powerful corrective swings. If we will have less than 50% Ideal, of course, would be 61.8, the golden ratio Fibonacci, based on this magenta measuring the whole impulse. In that moment, we will have a fast impulse in the direction of this bearish trend, and usually we'll design an A, B, C, D, where AB equal at least with CD. Of course, could be a ratio 1.274 involving there between A and B, two scenarios, but this is how we should see it. Anyway, right now, since the price action is between the moving averages, we are still bearish. This is the highest probability setup, but based on the weekly chart, we are here on the weekly chart, we will still focus on actually we will stop trading long, stop trading short due to this signal. Anyway, on the daily, we have the price action running above the moving averages. We kind of foresee it. We were expecting a pullback that eventually, let's say, will go above this line. It's significant for the weekly line, and of course the price action reach even this level higher based on the added on the counter trend, this white Fibonacci level. This is our usual level, 127.4, 132.8. It is also in a confluence with the price action, significant heights and lows, so this is a significant resistance level. We are running above the moving averages, therefore if the price action will have a new high, we will consider this area like a new crossing in the initial direction. Here was the early signal that the price will change for the oil. The 50 EMA was crossing the 200 EMA differently than the weekly chart, from bottom to top, signaling potential bullish. Anyway, the price action must break this level, this resistance, in order to consider potential change of the trend. That, of course, if on the 4-hour chart we will remain above the moving averages. Here we are having this potential bearish harmonic pattern extension. It's based on this yellow one. Anyway, but that, of course, if the price action will drop below the 50 EMA, later on below the 200 EMA, and in my opinion, I will wait even below this significant support. I will take my short shot just because it is in the direction of the weekly chart, if I will see the same setup on the 4-hour chart and here on the daily. And of course, here I will lock my trades, expecting, due to this potential bullish harmonic pattern extension, to have much more powerful corrective swing, probably to retest this previously broken in that moment support that should act as a resistance. So I will shift my stop loss level in profit here at this dark gray bullish harmonic pattern extension. Let's see the 4-hour chart. This is our December chart. We were expecting after this crossing, the 50 EMA was crossing the 200 EMA from bottom to top. This is a bullish signal, a bullish setup. We were expecting the price action to retest to the PIP the 200 EMA, which it did, but much later on. And I've told you we won't have much liquidity on the market during the New Year's Eve, and probably lots of institutional traders were waiting for the end of the semester, actually trimester, semester, end of the year reports. And of course, many of these reports were published after the 15th of January. And due to this idea, we have kind of ranging on the market, signaling exhaustion. And after the 15th of January, the market started to move, and of course, for many financial instruments, trending. This was a forecast tool, and in case you are here, you should have adjusted like this. Looks like an M letter as a potential bullish harmonic pattern inside of a bullish channel. If we will draw here, this is a bullish channel in development. I had to point you differently for the video. Anyway, here, after the moving average is retest, after the 200 EMA retest, a new retest of the 50 EMA with a false breakout, and of course a new retest of the 200 EMA. So this is signaling exhaustion, and neither the sellers nor the buyers were wanting the trend until, even though we are running above the moving averages here on the 4-hour chart, the price action will go above this significant resistance and above this initial breakout bullish fractal. This became the bullish fractal, so this one must be broken in order to consider the continuation of this 4-hour chart bullish trend. We will, in case you will go long here, you should lock your trade around this next significant level. It's added on the counter trend. I think I have to zoom it to point you like this. This is the last counter trend, this one here. Okay, bullish counter trend, bullish again. So this counter trend 161.8 should be the key level for locking your profitable trade for the bullish side in case you will go there. I will personally wait for the highest probability setup, and the closest to our trading objectives will still be to see a drop below the 200 EMA on the 4-hour chart. Let me zoom back. Hopefully it's the right, yeah. Okay, by having a drop below the moving averages and this significant support, looks like a rectangle between this resistance and this support, a drop below it might signal me that the weekly term trend, which remained bearish, has resumed. That's the highest probability setup. But in case we will have a change of the trend, this will be good for the world economy. The people will spend more oil, and in that moment, of course, we will have a highest price, prices on oil. But I will have to see it on the daily as well by breaking this level, which it is based on this last counter trend, our usual levels 127.4, 132.8, standalone resistance in our case here, or support for the opposite scenarios. The next level will be 161.8, but after breaking this area, it's safe to go long on the oil, thinking that we have some profitable pips to collect here on the weekly. Let's measure this to see if it's worth it. It's something like 75 pips, not too long, but we can lock our long positions around here, and in case the price action will fail to break the 200 EMA in order to change the trend on the weekly as well, we will have something like 50 pips to collect on the long side on oil. Other than that, I will go for short, as I've pointed you earlier, below the significant support on the 4-hour chart. That's it for today, guys. Thank you for watching my long videos. I know it's kind of difficult to watch my whole video at once, but you can find chapters. Usually on all my online communities, I place chapters with minutes and seconds. Even if you can't click on those links, some communities don't have this option, you can scroll inside my video to those sections, those financial instruments that are suited for your trading activity. And of course, I recommend you to watch entirely my videos, because in this way you will see many examples, difficult examples perhaps, and this can help you to understand how I'm reading charts and how I'm building these great forecasts with invalidation levels and so on. And of course, if you find my work, my free work, useful for you, for your trading activity, it might be useful for your friends as well. So don't forget to share my links from my online communities with your friends. In this way, they will receive exactly like you did another way of reading financial markets. Hope you like it, and hope you'll share it, and hope to see you again soon.